Decoding the Self-Made Millionaire Investment Mindset. Esoteric Principles that Free Them from Poverty Forever. Part 1. Are you getting it all wrong? Have you ever wondered, is the money I'm earning really mine? You work hard, save every penny, maybe pay off a mortgage or a car loan, thinking you're building a future. But deep down, there's this nagging feeling, like you're running on a treadmill, giving it your all, but getting nowhere. You ask yourself, am I doing something wrong? Am I getting poor? You're not alone. In the US and Canada, millions of people aged 25 to 44 are grappling with the same unease, working harder, but their wealth isn't growing, while 2025's 4% inflation eats away at their money's value every year. You've been told that saving, buying a house, and grinding at your job is the path to wealth. But look around, the self-made millionaires, the ones who've escaped poverty for good, they don't follow that path. They know something 95% of us don't. They hold an esoteric investment mindset, a set of principles not taught in schools or on TV. I'm not promising to make you a millionaire overnight, but if you stick with this video until the end, you'll uncover 5 core investment principles that self-made millionaires use to build lasting wealth. Not through luck, not through inheritance, but by thinking differently. These aren't the usual financial tips from online gurus. These are rules forged over centuries by the sharpest minds, by people who rose from nothing to conquer the system. We'll count down these 5 principles, from how they view money to how they make it work for them. And most importantly, you'll see how to apply them today, whether you have $1,000 or $100,000. Are you ready to decode the mindset of those who've broken free from poverty forever? Let's start with the first principle, one that most of us get wrong from childhood. Part 2. The 5 Esoteric Principles of Self-Made Millionaires. You're here because you want more, not just to survive, but to thrive. Self-made millionaires didn't become millionaires by working harder than you. They succeeded because they think differently, invest differently, and play a game most of us aren't invited to join. Let's count down the 5 esoteric investment principles that help them escape poverty and build lasting wealth. Each principle is a puzzle piece, and when you put them together, you'll see a whole new picture of money. Principle number 5. Money isn't wealth, it's a tool. Picture this. You're holding a stack of cash, $10,000, $50,000, whatever you've saved up. You think it's wealth, your safety net. But here's the harsh truth. Cash isn't wealth. It's a tool that's losing value. With 4% inflation in 2025, your $10,000 today will be worth just $9,600 next year, and $7,400 in 10 years if you do nothing with it. Yet most of us were taught to save, to park money in a bank at 0.5% interest, and call it smart. Why is this a mistake? Because cash doesn't create value. It just sits there, eroded by inflation and taxes. The Federal Reserve says 60% of U.S. households keep over 30% of their wealth in cash or savings accounts, while self-made millionaires hold less than 10%. They know that to escape poverty, you must turn money into real assets, things that generate income or grow in value over time. What do self-made millionaires do? They use money as a tool to buy cash-flowing assets, like rental properties or dividend-paying stocks. For example, with $50,000, instead of stashing it in a bank, they buy a small rental property, generating $500 per month after expenses. In 10 years, they've not only preserved the $50,000, but also earned $60,000 in rent and built equity. The takeaway? Don't hoard cash. Let it work, buying things that pay you, no matter how small you start. Once you start seeing money as a tool, you'll spot a bigger mistake most of us make. Once you start seeing money as a tool, you'll spot a bigger mistake most of us make. Principle number 4. Invest in cash flow, not hope. Think about the last time you heard, "Buy this, it's going to skyrocket." Maybe it was a tech stock, crypto, or a house in a hot neighborhood. Most of US invest based on hope. Hope the price will soar, hope the market booms. But that's gambling, not investing. S&P 500 data shows 80% of individual investors lose money trying to time the market, and US home prices have only grown 3% annually since 2000, barely outpacing inflation. Why is this dangerous? Because investing in hope leaves you at the mercy of things you can't control: markets, interest rates, trends. If you're wrong, you lose money, time, and confidence. A $450,000 house might not appreciate as you expect, but you're still paying a $2,500 per month mortgage, plus taxes and maintenance. Self-made millionaires don't bet on hope. They invest in cash flow, assets that produce steady income, whether the market rises or falls. For example, instead of buying a home to live in, they buy a $450,000 duplex, renting it for $3,000 per month, covering the mortgage and pocketing $500. Or they buy dividend stocks, like an ETF with a 4% yield, paying $400 per year for every $10,000 invested. Cash flow brings certainty, letting them sleep soundly even in a recession. The takeaway? Don't chase price spikes. Buy assets that pay you, starting today. When you focus on cash flow, you'll see why millionaires dodge another trap most of us fall into. Principle number 3, discipline over emotion. Have you ever bought an investment because everyone's doing it? Or sold an asset because you feared a market crash? That's emotion driving you, and it's wealth's greatest enemy. A 2025 Bankrate survey found 50% of individual investors sold during market volatility, locking in losses, while those who stayed patient often recovered. Emotion makes you buy high, sell low, and miss long-term gains. Why is this a problem? Because markets are designed to exploit your emotions. Headlines scream, "Crash coming," or "This stock will 10x," pushing you to act rashly. The result? You buy Bitcoin at its $60,000 peak, sell at the $20,000 bottom, and wonder why you always lose. Self-made millionaires put discipline above emotion. They have a plan and stick to it. They invest consistently, regardless of market swings, using strategies like dollar-cost averaging, buying $200 per month in an index fund. They set long-term goals, like building $500,000 in 20 years at 8% returns, instead of chasing trends. If the market dips, they buy more, knowing low prices are opportunities. The takeaway? Build an investment system, and don't let fear or greed derail you. Discipline keeps you from emotional mistakes, but to truly get rich, you need to embrace a truth millionaires live by. Principle number 2, own, don't work. Most of us were taught that working hard, getting promotions, and earning raises is the road to wealth. But here's the truth. Working for a paycheck, no matter how big, will never free you from poverty for good. A 2025 census study shows 70% of Americans rely on wages to survive, with less than 3 months of emergency savings. You're trading time for money, and time is finite. Why is this an issue? Because working limits your potential. Even with a $100,000 per year salary, after taxes, housing, and expenses, you might save $10,000 to $20,000. To reach $1 million, you'd need 50 to 100 years, too late to enjoy it. Meanwhile, costs like housing, $2,500 per month, and inflation erode your progress. Self-made millionaires don't work for money. They own assets that create it. They buy small businesses, real estate, or company shares. For example, a $100,000 small business might generate $30,000 per year in profit, 10 times bank interest. Or a $50,000 REIT could pay $2,000 per year without lifting a finger. They build a portfolio of assets to replace their paycheck. The takeaway? Stop working for money. Start owning, even with a small investment, so money works for you. Once you start owning, you'll uncover the final, and most critical, principle of self-made millionaires. Principle number 1. Think long-term, not get rich quick. This is the biggest myth society sells us. Wealth comes fast, through a big win, a lottery ticket, a stock explosion, or a real estate flip. But the truth is, 90% of self-made millionaires built their wealth over 20 to 30 years, not overnight. Forbes says the average self-made millionaire took 22 years to reach $1 million through patient, disciplined investing. Why is the get-rich-quick mindset a mistake? Because it pushes you toward high-risk bets, like crypto or meme stocks, where 80% of investors lose money. It blinds you to the power of compounding. $10,000 at 8% grows to $46,610 in 20 years, but only $14,693 if you cash out after 5. Worse, it makes you impatient, giving up when results aren't instant. Self-made millionaires think in decades, not weeks. They invest in durable assets, like S&P 500 index funds, historical 10% annual returns, or real estate with steady appreciation. They start small, $100 per month in a retirement fund, and let time do the rest. They know every dollar invested today is a seed for tomorrow's freedom. The takeaway? Ditch the get-rich-quick dream. Plant your wealth tree today and let it grow over time. Part 3. Break free from poverty and rewrite your story. We've just walked through the 5 esoteric principles of self-made millionaires: treating money as a tool, investing in cash flow, prioritizing discipline over emotion, owning instead of working, and thinking long-term. Each principle, on its own, seems simple, even obvious. Who doesn't know saving is good or investing is necessary? But when you weave them together, they form a powerful mindset, a roadmap out of the financial treadmill 95% of Americans and Canadians are stuck on. Think about this. Most of us grew up in a system teaching that safety lies in cash, a steady job, or a home you own. But self-made millionaires? They see that system as a trap. They don't wait for miracles or big breaks. They build wealth day by day, dollar by dollar, with patience and discipline anyone can learn. They're not smarter or more talented than you. They just choose to think differently and act differently. Here's the good news. You don't have to stay where you are. Just by grasping these principles, you're already ahead of 90% of people who never pause to question. You don't need $100,000 to start. $100 per month in an index fund or $5,000 in a crowd-funded property can be your first seed. You don't need to be a millionaire tomorrow. You just need to begin today, with the mindset of someone who knows poverty isn't fate. It's a choice you can reject. This journey isn't easy. It demands facing your fears, fear of failure, fear of delay, fear of standing out. It requires living below your means, staying patient through the tough early years, and trusting in the power of time. But you can do it. Your determination, skills, and ambition, they're already powerful tools. Now, pair them with a new mindset, one that doesn't chase money, but makes money chase you. If these principles opened your eyes, if they made you want to take action to break free from poverty and build your future, consider subscribing to the channel. This is where we share the unspoken truths about finance. No hype, no sales pitches, just knowledge to help you take control. Have you ever felt trapped in this financial system? Drop your story in the comments. I'd love to hear it. The real question isn't how much money you'll make. It's which mindset you'll choose. The 95% who stay stuck or the 5% who break free. What's your next step?